Hello everyone. It's great to see you here on this Wednesday afternoon. Well, it's afternoon here for us on the East Coast. Happy October 17th, 2018 to you all. Today we're going to discuss using the PowerOptions portfolio tools to help you track and manage your options positions. For those of you that don't know me, my name is Michael Chupka. I'm the Director of Education here at PowerOptions and Radioactive Trading. Now I want to begin with what exactly is PowerOptions? Well, it's an online website, a patented suite of search and analysis tools designed for self-directed options investors. Our tools allow you to search across the universe of options in over 23 of the most commonly used option strategies. You can use our default searches or adjust the criteria to make tweaks to find just the positions you're looking for. We have further research and analysis tools to help you quickly compare the risk versus reward, other strike prices that might be available on a given stock. We covered that in last week's webinar in researching and analyzing a position. Today we're going to be focusing on the PowerOptions portfolio tools, which allow investors to paper trade, track their real positions, set alerts, have alerts emailed to you, and evaluate rollout opportunities and adjustments to manage your positions. Now, of course, we do offer countless educational articles, help pages, and archive webinars to help investors get more familiar with the tools on the site, but more importantly, the various options strategies, management techniques, and more. Now, we've been in business for over 20 years, but everyone here on staff uses these tools to trade their personal accounts, myself included, so we have many more years of combined trading experience. Now, a quick review, what are we going to cover today? Well, we're going to cover the functionality of the portfolio tools. We're going to show you how to quickly create a portfolio in the My Portfolio section. We're going to show you how to enter new positions into the portfolio from the search tools or analysis tools, or how to manually enter your positions as well. We're going to take a look briefly at the different views for tracking and what the different columns mean. We're going to walk through setting alerts on our positions, looking at the position analysis tool to evaluate rollout opportunities, and the simulate trade feature, the simulate trade feature to apply your analysis to the positions. And we're going to also talk about using the profit and loss chart to manually evaluate adjustments and how to quickly view closed, rolled, or other transactions as well. Now, before we go any further, I am actually going to launch just a couple of polls here. I'm curious to know, to help us with the rest of the presentation, what strategies are you currently trading or paper trading right now? Are you looking at covered calls, naked put positions? They're sort of cousins of one another, almost parity trades. Are you doing protected positions, married puts and collars? Are you doing vertical spreads, credit spreads, debit spreads, and more? Are you mostly focused on buying options, buying calls, buying puts, maybe straddles or strangles? Or are you doing calendar spreads, maybe horizontals or diagonals? So I'm just going to leave the poll open for about a minute here. It's been open for about 30 seconds, so we'll leave it open for another 30 seconds. Okay, so we have about half of the audience voting, and so far it's only in one category, which is interesting. Okay, so let me go ahead and close the poll now. I'll share the results with everyone. And for those of you that answered, about 72% it looks like, 100% says you're doing covered calls and naked puts. All right, fantastic. It's perfectly fine. Now, let's go ahead there. Let's hide those results. And just curious to know now, what type of tools do you use now to track and manage your positions? Are you using the portfolio tools at your brokerage? Do you keep your own spreadsheets for tracking positions and evaluating maybe rollout opportunities or more? Do you use a third-party portfolio tool? Or are you currently using PowerOptions? And again, I'm going to leave this poll open for about a minute. It's been open for about 35 seconds. A 50-50 split right now with about 60% of our audience voting. All right, let me go ahead and close the pull down in the next 10 seconds. Okay, so 5, 4, 3, 2, 1. Let's go ahead and close that pull. And 50-50 right now, using your brokerage tools, or you have your own spreadsheets to track, manage your positions, mainly track your positions. One last quick one. I'm just curious now. And the last quick one is, when do you typically manage your positions? Everyone has a different way of how they manage or their timing of their management. Do you typically wait as long as you can, maybe if you're doing a covered call or naked put, to get that last time decay? So you do wait till about 3 o'clock, 3:30, 3:45 on expiration day. Do you evaluate positions maybe 1 to 2 days prior to expiration to see what management techniques you're going to do? Do you typically look earlier on the week of expiration, Monday or Tuesday? Are you constantly adjusting positions, rolling up, rolling down, rolling out in time? Or do you look to manage a position when one of your triggers is hit, maybe based on a stock technical, stock fundamental, price of the stock, price of the option, decay as well? Excuse me, just going to take a quick sip of coffee there. All right, well again, poll's been open for about 45 seconds, going to leave it open for another 15 seconds. We've got a three-way split here. All right, so let's go ahead and close the poll. Last poll, I promise, we'll share the results. 50% of you typically look earlier on the week of expiration, early, maybe Monday or Tuesday. 25% of you are constantly adjusting or rolling the positions. 25% of you react when a trigger is hit that you've set. Very well. All right, so let me just go ahead and hide that. And all of that being said, let's just go ahead now and navigate over to the PowerOptions suite of tools. We're going to go through our 8 steps that I mentioned here as well. So let's go ahead and switch over to PowerOptions. Fantastic. Okay, so what we're looking at here is just the basic PowerOptions suite of tools. Everything is arranged by a tab navigation system. I mentioned we support over 23 of the most commonly used option strategies, so if you don't see a strategy listed, simply click Other Strategies and you can customize the tabs on the top. Always locked in place is the main Home tab, the My Portfolio tab, and the Signature tools as well. Let's get started. I want to create a portfolio. Whether I'm starting from scratch, meaning I just funded an account, I haven't opened any trades yet, or if you're coming to PowerOptions, you already have an account open and you're looking to mirror your brokerage account to use some of our special features here in the portfolio to help you with your management. The first step is we'll go to the My Portfolio tab and I'm going to go into Setup. The Setup is a basic view. It just shows me which portfolios I currently have right now. But we want to just go to New Portfolio. This is the only thing that you would see if you just came to PowerOptions, whether you started a trial or you're a current subscriber. So we're just going to call it My IRA Portfolio. Now, if I just funded an account with $50,000, I'd start off with a cash on hand of $50,000 and copy that over into the starting basis. As I enter trades, the cash on hand naturally is going to lower, and we'll see the return based on our initial starting basis. If you already have a portfolio, you already have 10 or 15 positions in your portfolio, what you'd want to do is start off with the cash on hand as the current liquidation value or total value of your portfolio. So let's say I started with $40,000, but over the last 6 months, I've been able to make a reasonable return on the position. My total value of my portfolio right now is $53,368. But I have several positions that are already open in that portfolio. That's fine. Even though my cash on hand in the portfolio with my open positions might only be $10,000, I want to put the liquidation value here and copy it over into the starting basis. And then, of course, we can change the date that we'd want for the portfolio. If I say I wanted to open this back in March of 2018. All right, very simple. and we'll just save all changes. But that's the first step. You use the setup tool, put in either your direct starting basis or your total value of your portfolio now to mirror it. Second, we want to talk about entering positions into the portfolio from the tools or manually entering your positions. First, now I don't have covered calls select. Oh, I do. It's over here at the end. 100% of you who answered the poll said you were doing covered calls and naked puts. So I'll just go to covered call and I'll go to search as I normally would to identify new positions that match my criteria. Naturally, when the search comes up, the results here are based on the default criteria, whether I'm selecting weekly picks of the day, monthly picks of the day, any other default searches, or any of the searches that you might have created for your own personal account. Let's go to monthly picks of the day for the time being. And we only have one, Kirkland Lake Gold. Now, following what we discussed last week, I then further research and analyze the position, take a look at the chart, company information, and more. But I decided I want to enter this trade. It's a stock at 21.53. We can sell the November 16th 17.5 strike for maybe around 410 or 420. Very simple now. What I'll do is just go into that More Information button and click on Add to Portfolio. This is going to copy over all the information for me. But first, I want to select which portfolio I want to enter. And we're just going to go ahead and use that My IRA portfolio and click Insert. All right, now, although all the information was copied over for us, transaction date, price per share, listed bid price for the covered call transaction, I have to put in which shares I want. So let's just say we're going to do 400 shares of this position. Your commission fee. This is based on the total commission that you would pay for the stock or for the option. Let's say at my brokerage house, my commission is $5 per 100 shares of stock. Well, very simple then. For 400 shares, this would be a $20 commission. And if there's an extra fee added to it, let's say 45 cents, I'd put in my total commission of $20.45. And let's say for one contract, my commission is $5.95 and 50 cents above for every contract after that. So it'd be by $5.95 for my options transaction, plus 3 extra contracts, the other $1.50. That's going to put us at about $7.45. Okay, so my commission fee here would be $7.45. Just put in the total. If there's an extra charge, 12 cents, 10 cents, 8 cents, we'll just add that in. Let's say it's 8 cents. So my total commission for the stock is $20.45. My total commission for the option is $7.53. It's not per contract. Put in the total that you paid. All right, now I've got all my information entered. It's copied over for me. Let's just go ahead and click Submit. Now, notice at the top, we're still in the My Portfolio tab, but now we are in the Portfolios view. This is where it shows us our active and open positions. It's listed by strategy. So we have one covered call. We opened it on Kirkland. We have the symbol and the short call transaction. If this was a collar, you'd have a line for KL, the stock, of course, short call, and the long put. The description of each, pretty simple. Your quantity, the transaction date, and the age. For a position such as a covered call, a married put, or a collar, the age for the stock is going to show up as 0. And tomorrow it's going to be 1, 2, so I have a gauge of how long I've been in the stock. For any option that you enter, buy or sell, the age in parentheses shows me how much longer I have to expiration. Okay. All right, so let me just adjust the screen a little bit for everyone. There we go. That's going to help us out. Next columns that we see, and this is in what's called the standard view, in this case, is the net cost. So the total cost for 400 shares, at 21.53 plus my commissions is $86.32. Total premium, 4 contracts sold at 410 minus the commissions now, $16.32. We see the change. We're giving up a little bit to the bid-ask spread. and then the effective cost per share. What does that show me? Effective cost per share as I make adjustments. As I roll this call up or down, make adjustments to this covered call position, the effective cost per share will lower or increase based on buyback costs or premium received. Now the upper and lower stop limit, that's going to appear when we enter our alerts on the position. The current price, of course, just showing us where we are today. We're down 6 cents total today. And of course, the option buyback, the ask price is at $4.25. So that's where that 15 cents came from. So we can see the gain or loss on each individual leg and the total market value. Up here at the top in the details, this just shows us your basis date. What we did put in as our starting basis, our remaining cash on hand after this entry from the search tool, and our total return. It's just based on slippage from the position. Now down below, what is this total net cost? This total net cost is the total out minus any premium received. If you've got 20 or 30 positions, that's what the total net cost will show you. And as we can see here, the total net income is based on just the premiums. Of course, I might have 15 positions in here, a few covered calls, a few naked puts, maybe a bull put spread. The total income will reflect all of the premium currently taken in as a total, not as liquidation. Now, before we go into entering the position manually, I want to talk about the different views that are available. So we're looking at the standard view. You can see the change line by line for every option in your specific strategy that's listed. For many positions, spreads, covered calls, any combination that is more than one leg, including the stock leg, I prefer to use this position analysis view. This view adds 6 extra columns over to the right-hand side. So whether I'm in a diagonal spread, a covered call, collar position, married put, multiple leg strategy, I get to see the total cost of the position. In this case, stock and short option together. Remember, we paid $8,632 out of pocket, including commissions. We took in $1,632, worked out real nice. We've got $7,000 total invested in the position. Your liquidation value, if you sold to close the stock, bought to close the call, we'd only have $6,824 or a loss of 2.5%. That takes into account, by the way, the commission costs. So I put in $20.45 as my stock commission for 400 shares. If I sold to close the stock, it takes into account another commission of about $20.45. That's where that extra premium is coming from. Now the expiration value. This is not a projection of where your position or where your stock might be trading. What we're showing you is that if the stock stays at the same price, $21.53 right now, what would your gain or loss be at expiration for this position? Okay. Even though, of course, we sold the call there, the 1750 call, the expiration gain or loss if the stock's trading at this price is a reflection there. Okay, so we've got all that in play. That's the position analysis view, which will help you to just look at your liquidation value compared to potential future expiration value of this position. The Greeks view. Once you have multiple strategies there, the Greeks view allows you to see your exposure as far as total delta in your portfolio, gamma, theta, vega, and more. So it's not giving you a price summary, it's just giving you a summation of the Greeks, gamma, theta, and vega, so you can see your exposure based on movements in the outside market, SPX, sudden black swan event, or anything along those lines. Of course, we only have one position, but the important dates are also very useful to show you when you have earnings coming up, if it's confirmed, if it's before or after market, next dividend date or past dividend date as well, to give you a quick gauge of that information. All right, now, most of you are active traders, so if you just started your PowerOptions trial, or if you've been in PowerOptions and haven't set up the portfolio yet, you're going to want to enter your positions manually. So let's say that I have a common covered call open on, let's say, Apple, and I had the stock at a cost basis of 145 from a month ago or so, or 2 months ago, and I currently have a 150 call open that expires on October 26th. Well, I'd want to enter that into the portfolio manually. And to do that, when you're in the portfolio's view, simply click the drop-down for Enter a New Position and select the strategy. Now, if this is a true covered call that I'm in for Apple, I don't want to enter it as a long stock and then as a short call. I want it combined so I can see that proper analysis view. So I'm going to click it as a covered call. And just as you do as your broker, we just have to enter the information. So I'm doing a couple hundred shares of Apple. And let's say that I open this position back sometime in September. Let's say the 14th. Again, I'd put in my commission fee for 200 shares. Let's say we'd be around $9.95. And I put in a cost basis of $145. I just simply select the option from the chain. We sold on October 26th. Let's say we were a little bit bullish on the position at the time. Well, it's way out of bounds here. It's up at 220. Let's go ahead and change that to 215, shall we? We're going to change that to 215. I haven't been paying attention to Apple much. I apologize. All right, so we'll put that in at 215. And at the time we sold the October 26 expiration, let's say we sold at 217.5, just out of the money, for 355. And of course, we'll change the transaction date and put in our commission. Let's just put in 645. All right, so then once we're done, click Submit. Now we have 2 covered calls in our new portfolio on Apple, on Kirkland Lake Gold, which we just opened today. Again, we see that we've been in Apple for 33 days. We have 9 days to expiration on our covered call position. I would stay in the position analysis view so that on Apple we can see that my original expected return on this position was 2.8%. If I liquidated right now, I'd have a return of 1.3%, but if it stays the same, or at least above our strike price, for the next 7, 8 days, 9 days or so, we'll receive the full profit of 2.8%. Now, if Apple was a position that I wanted to hold longer term, probably would have sold deeper out of the money than just one strike when I bought the stock at 215. But what I'd want to do now is when I enter any new position, I'm going to want to set various alerts. So simply in the second column here, we'll just click on Alerts, and we'll click View for the Apple position. We bought the stock at 215. We know we sold that 217.5 strike. We got about 355, not including commissions. So we know our break even is around 211.45. But if you typically use a stop on the stock as a trigger to manage your covered call, to roll your covered call, well then we'll just put that in to the stock price limit. So let's say I'd probably consider rolling this 217.5 call if the stock dropped down maybe 10 points to 205. So I'll put in a lower limit of 205, the stock price limit, and I'll mark this as red as a warning. If I was bullish and I was hoping to be assigned at the 217.5 strike price, I might just put the upper limit in at 217.50, and I'll mark that as green. So that lets me know that my option is in the money. I'm in the full profit zone if I go through to expiration. So it's a quick way to mark that it's in the money. If you commonly use a stop on your naked puts, your covered calls, that if the stock falls 7 or 8%, simply use the percent decrease. So I want to say if it drops 8% from my entry price of 215, and that again would be a warning. So I'll set those alerts as well. Now for the option leg number 2, I can set in limits for ask limit or option percent change. Why is this important? Many of you may look to roll or adjust your positions if you've made 80% of what you expected to make. A covered call, naked put, bull put credit spread vertical spread. So you can just use the percent option change. If I get a decrease of 80% in that value, that's actually favorable to me. Or if I just want to know if it reaches the time value or the time value reaches below 10 cents or 15 cents as a buyback cost, I can set that as well. Of course, you can set an alert on the total position change, and this is for any option strategy that you can enter into the portfolio. So the total position change, if I have a decrease of 10-15%, want to be notified. I may have selected these covered call positions or the Apple position because at the time the stock was trading above its 20-day moving average. Common thing to use for a neutral to bullish position, or if the stock's trading below the 20-day moving average. So I'd want to use that as an alert. I want to be notified if my stock is trading below the SMA 20 or the 50, 100, and so forth. You can also select if you want to be notified if the 50 is below the 100, for example, if that's a trigger that you use. Bollinger Bands, days until earnings or ex-dividend. I want to be notified if I'm within 3 or 4 days to earnings, and I just might use that as a yellow. Or if we've hit a new 52-week low or a new 52-week high. Now, in addition to that, I can choose to have these alerts emailed to me once they're set, but let's go ahead and save the alerts now for our Apple position. And I see here that one of them's already been triggered. And of course, it's one of them at least is that upper stop limit of 217.50. Notice how the upper and lower limit were filled in for me based on the prices that I put in, and I can see quickly when I go to my portfolio whether or not they've been triggered. So now this has been triggered. What do? I click on alerts, just click on view, and it shows me a breakdown. And the stock is currently below the 20-day moving average, but at the same time it is above my upper limit of 217.50. Again, as I mentioned, let's go back to that main portfolio view. And up at the top here, you can see, of course, when we can email alerts when they trigger. Okay, so that'll be available to me as well. So we've talked about the first few steps so far, creating a new portfolio, entering positions, different views for tracking, and setting the different alerts. Now an alert's been triggered on my Apple covered call position. What might I need to do? I may need to consider rolling or adjusting the position based on what my expectations are, what my goals are for the trade, and the current conditions in the market. Whenever I want now, if an alert's triggered or I need to manage, what I'll simply do is go to the More Information button to the left of this existing position, go to Position Actions, and then Position Analysis. Now if I've decided to liquidate this position, I will just go to Close Position. If I just want to close the covered call leg, or I'm closing one leg of my spread, we'll just select Closed Leg. From this menu, if I made an error in the entry, if I put in 20 shares of stock in 2 calls instead of 200, when it's in the portfolio, I just edit the position. If you're paper trading and you just want to delete a position or delete a leg, that's there. If I wanted to make this a collar, I just add an option leg, and we'll get to the dividend in a little bit, but I'd add the dividend right here if I cross the ex-dividend date on the position. But position analysis is a very powerful tool here as you're tracking multiple positions, if it's bull put spreads, married puts, covered calls, naked puts even. First view of the position analysis gives us the profit and loss chart for the trade. We see that we're in the maximum profit we expected. We do have 1.4% time value remaining on our short call. We have 9 days to expiration. Earnings are coming out on November 1st. That's very important. And the last ex-dividend date was on 8/10. I'm going to mark this down. It's 15 days away. I want to remember that the earnings is on 11/1. Now that's just the bird's eye view of my current position. Scroll down here, and I see a little bit more detail than what we could see in that position analysis view on the main portfolio. My original position value, total invested, effective cost per share based on the premium received, and my original expected return. And I can click the details link over here on the right to see the math that's involved in the calculations if you want to check those. Now the current liquidation value. If I decided to liquidate this position, now that 2 of my triggers have been hit, it's below the SMA 20 and it's above my short call strike price. It's in the money. If I liquidated right now, we'd make $565 or 1.3%. Just under 50% of what we expected to make. Right? So we expected 2.8 as the max return. We're only at 1.3% right now. So it's about 47.8% of the max expected return. Liquidation profit over expiration profit. You'll see all of these same listings, whether you're looking at a bull put credit, a diagonal spread, married put, straddle, or strangle, for example. You'll see the same comparisons, and again, you'll be able to click on the details to get the further math. Now, future expiration value in 9 days. This is not a projection again. We're saying that Apple's going to stay right at 220.29. It's just saying that if the stock stays at the same price in 9 days, we'll get the full return on the position. Now again, depending on my goals for the trade, if I was just using this as a static covered call to make close to 2.5, 2.3, 3% over the course of a 30-day period, I'm likely at this point just to leave it open and let it get assigned. Take my return and open new positions. If I sold that out-of-the-money call because I was hoping to just get some premium and have it expire, and I didn't think the stock was going to go above the 217.50 strike price, and I want to stay in Apple, now it's time to evaluate rollout opportunities. And here we do all the heavy lifting for you. So what this table shows us is that if we bought to close our current call right now, for a price of $585, we originally collected $355, and rolled to a higher strike. Of course, we know the stock's at 220.29. But if I want to go to a further out-of-the-money strike, am I able to roll for a credit? Now we show that, the adjusted net credit, based on what you initially received for your original call and the new credit you're receiving for rolling out to the next strike. We also show you the new percent if assigned return, which is extraordinarily important. In a spread, a bull put credit spread, for example, it would be the new percent return, or a collar. You'd also see the new risk and the new percent return. Why is this important? Well, I know right now I'm at 1.3% after roughly 30 days. Yeah, close to it, right? It's about 33 days. If I hold it for another 9 days, let's say we'd make 2.8% if it stays above. Now this is my goal. This is my trading target, 2.5% return on a covered call for a 30-day trade. So if I extend it and I move 16 days out in time to the 222.50 call, I want to make sure that this matches my trading goals. And in this case, it does. If I increase it by 7 more days from expiration next week, I move from 2.8 to 5.1. That'd be a 2.3% gain potential on the position if I take assignment then for an additional 7 days for my expiration on the 26th. So this matches my trading goals. We'll take a look at another position later where I may have to roll further out in time because the trade is not matching my goals. But you can scroll through and see other expirations. If I want to extend it 23 days from now, 30 days from now, what is my new return? Am I able to roll for an adjusted net credit? You see some of these are not. Going out to November 235, deeper out of the money, it's going to be done at a debit. So if you want to roll for a credit, you're going to stay with the positive ones, still matching the potential return for your specific trading plan. Let's stay with that November 222.50, just 2.5 strikes above where we are now, but we're going to roll out of the money to avoid assignment in the next 7 to 8 days. Well, it's great to see things mathematically. When I've decided I've found a rollout opportunity that matches the adjusted net credit I'd want to keep, still gives me a reasonable downside protection, this is a little bit lower than I'd like, and still has a return that matches my trading plan for extending the position. What I'll do now is click the More Information button next to our rollout opportunity. We'll go to Simulate Trade. Now you saw this in the screenshot. Oh, I apologize, folks. You saw this in the screenshot earlier in the webinar. The Simulate Trade feature gives you a side-by-side comparison from the rollout opportunity. On the left in red is my original position. 200 shares of Apple, sold the 217.50 October 26 call. My total cost, current liquidation value, and the max expected return at expiration if the stock was above the strike price. And it's shown here on the profit and loss chart. The position in blue is what my new position would look like if I did perform this rollout opportunity. We buy to close our October call for 605, sell it sell the 2nd of November 222.50 for 575, our new cost basis, our new max profit, and our new percent return side by side, and that's shown here in blue. So I get an overlay now to compare my existing covered call and what my return will be versus what it could be on November 2nd if I think the stock's going to move up and I'm looking for that extra 2.3% return on the position. If I decide I don't like this comparison, I can just close this trade simulator tool, go back to the rollout opportunities we saw before, and evaluate which one matches. But if this is the return that I want, I'll simply scroll down below, and it's got everything entered for me. We're going to buy to close 2. My commission fee is carried over. Do it today at 605. Let's say I got a better price. Between the bid-ask spread, let's say we got $5.95. I'm going to sell to open that Apple November 222.50 call, two contracts, of course, excuse me, and a commission fee. Now let's say for a roll at your broker, they charge you that $5.95 for buying to close the first one, plus a little 50 cents for 2 contracts, but then they only charge you an additional $1.20 if you're doing a roll. Let's say even 80 cents. So in this case, I might just enter 80 cents for the commission fee on this new one. The total commissions will be taken into account in my portfolio. Oh, and let's say we got a little bit better here. We got this at $5.85. So this roll specifically is done at a debit, but remember we took in $3.55 initially. So now I'm increasing, well not increasing, but my still adjusted net credit is going to be $3.45, and we're increasing the strike price by 5 points. Reasonable roll position in this case. All right, now, once I have it entered, I just want to submit change to portfolio. Simple as that. It's going to take us right back to our portfolio view for our IRA simulation account that we created today. And we still have our Apple covered call and our Kirkland covered call that we entered from the search tool with one click. Now, notice though that it's not the October call. The 26th of October, we now are showing the open position, our Apple shares plus the 2nd of November 222.50 strike. My alerts are still triggered, but I might want to change this now, don't I? This was when I had the 217.5 call open. Now that I've rolled the position, let's go back into alerts very quickly. And we're going to change the upper alert. Well, we sold that 222.5. Let's give it some breathing room. Let's put it up to 224 now. So if the stock reaches 224, I may consider rolling up to the 225 if I want to stay in this position. If not, maybe it's just a good idea to let it get assigned at that price. Or again, if you just want to be notified if you're in the money, I'd set it at the current strike price. But I'm going to leave it at 224 for now. That's all I have to do. I'm going to leave, of course, the SMA values. Let's just click Save Alerts. Now the upper limit's not triggered, but of course that SMA 21 still is. So that's how you can adjust the alerts, use the position analysis tool to evaluate the rollout opportunities. And it'll appear for multiple strategies. We'll take a look at that in just a moment. And then, as you're in the rollout opportunities, when you find a rollout that looks appealing, use that Simulate Trade feature to apply your model to it. Does it match your return? Does the profit and loss chart of the new position match your goals for extending the position? And at the same time, you can then enter the adjustment, the roll, directly from the position analysis view or the Simulate Trade view. Okay, now, before, let's just talk about a different view. You don't have to use the rollout opportunity feature. Okay, I mean, you don't have to use the rollout opportunities we show. It's a way that we do the heavy lifting for you, a way for us to help you, so we do all the math so you don't have to recalculate by hand what is the new return, what is the new net premium. That's all taken care of for you. Oh, by the way, based on our adjustment as well and the commission costs, we did increase the effective cost per share with that roll adjustment. So that's going to be taken into account as well. So now, next time I go to the position analysis screen, or we just go directly to the profit and loss chart for the position, that's already shown for us. It's taking into account our effective cost per share, so I get a clean view of what my return is based on any previous adjustments. But as I mentioned, we don't have to use, I prefer to use it for my married puts, for my diagonal spread trades, some of my straddles even. I use that position analysis to see the rollout opportunities. But sometimes you may know the roll that you want already. You already have your trading plan. You already want to roll the position. Let's switch gears. Let's navigate over to a different portfolio I put together before this presentation. And here we have a couple covered calls on Netflix, a couple bull put spreads that look like they're working in our favor, and of course a long call on Netflix. Yeah, I cheated. I used that today because of the large gap up in price. Again, take a look at the bull put spreads. On CMI, we've got a 144, 142 bull put spread. And as I click on the position analysis view in the standard portfolio, in addition to seeing the total liquidation value for the covered calls, for my long call, which is only just one leg, but I also see it for the bull put. So right now I'm down about 41.3% as CMI has dropped to 145.89. It's getting near that 144 strike price. However, the NTS position has done the opposite. It's moved up, so I could liquidate right now for 91% of what I expected to make on the position. Total max credit would have been 280 for 10 contracts. I can close it now for 255. Not a bad idea to close it at this point, realize 90% of what I expected to make with 2 days to expiration in case something happens in the next 2 days and NTS pulls down. Rather make sure that I get most of that return. Be a good idea to liquidate the position right now. But let's take a look at that Apple covered call. Not at a trigger point yet on my CMI position, but it's getting close. I do see that I have an alert triggered for this Netflix position. And we say that we opened this stock at 325 back on October 10th, 7 days ago. 9 days to expiration with my 26 October 350 call. The stock's currently at 361.71. It's above my upper stop limit of 360. So, first thing I might do is click on the alert, see what happened. Well, there it is. The stock's above 360. It's above my upper limit. I'm going to consider rolling this position. Stock's bouncing around at, 362. After a big jump, pulled back a little bit after the earnings. Okay. But as I would do, I'm sorry, folks, as I would do before, on this Netflix position is I could go to position actions and position analysis. But let's say I've already made up my mind that what I want to do is buy to close this October 350 strike, and with a stock at 362, I want to go 2 weeks out, maybe to the 9th of November, and I'm going to focus on about maybe the 365 or the 362.50 if it's available. First thing I can do is I can manually do that roll. I'm pretty sure that that would appear in the position analysis view. But if you went to the position analysis and you didn't see a roll you were considering, simply go to the profit and loss chart. This again, it carries over everything. My original price at $325, sold that October 350 at the time for $12 on October 10th. Now the stock's up near 362. I've decided that I want to roll this out to either the 365 or the 362.50 if it's available for the 9th of November, 14 days away from where I currently am right now. So I'll just simply go to View Options. The profit and loss chart is giving us a reading of where our position stands. So if I'm going to roll this position, what's the first thing I have to do? Well, I've got to tell the system that, hey, I'm going to buy the 350 call back for around midpoint and try to get it for about 1850. Okay, so I'll just click that. Shows me it's been added. I'm going to buy it back. I'm just going to put in one contract. It's going to copy over the information for me. Now my thought is to roll out 2 weeks from expiration, or 23 days from now. So I'm going to go to the November 9th. And good, I do have a 362.50 above where the stock is right now. I do have a 365 as well. Both are going to be rolled for a slight debit. Because I'm buying it back at 1835, but I did collect $12 initially. So let's just go ahead and go with the 365. I just tell the system now I'm going to sell it. And I'm not going to put in a price. I'm just going to let the analysis do it for me and just grab the midpoints, 1850 and 1448. So it'd probably be 1445 or maybe 1450. And now we see that the new increase in return could move it up to 15%. This isn't actually simulating closing a leg and rolling it open. It's giving you a breakdown of what the position would look like mathematically based on the view. Now I could just take this down by 650, right? We originally sold this for 12. If I bought it back for 1850, that would add 650 to my position. Okay, so let's just do that. We know that it would easily go up to 331.50. But I'm still selling 365 call, 1448. Still that 15.1%. All the math is still the same. Here's my new covered call. And on this tool, I can also evaluate potential expected profit and loss. What happens if this drops down to 350 in the next 7 to 10 days? What happens if it goes up to 375? What will my gain or loss be on the stock or the option? So now we just manually performed a roll to evaluate the new cost basis, the new total profit, and the new potential percent return. You can use the profit and loss chart from the portfolio to help you with that. Now, if I decided I wanted to do this roll, I wouldn't add it to my portfolio from this tool. This is just to help you simulate if you didn't see a potential rollout that you wanted from the original position analysis view. What I'll simply do now is go back to the portfolio. I'll click on the More Information button as before. Next to the call, the leg I'm adjusting, we'll go to Position Actions. Sorry, folks. Position Actions, Roll Leg. And again, what are we going to do? The system knows if I'm rolling this leg, I'm buying to close this 350 call. We'll put in that midpoint, 1850. And of course, I can put in my commission fees as well. We'll just leave it at 0. And then I'm going to roll to that 365 to November 9th. So I just select it from the chain again. And, we saw the midpoint at 1448. Let's say I got 1445 for that transaction. Today's date, current stock price, and again, you could put in your commission fees as the total, or I could put in, again, if I wanted to do $6.95 for this leg, but then they add an extra 80 cents on me, I'll put this one in at 80. All right, so let's just go ahead and submit that. Fantastic. Now, what has changed? Well, I still have my alert in there, but I'm probably going to adjust this, right? I want to change that upper limit now. As we expected, as we saw on the profit and loss chart, the effective cost per share of the stock moved up to $331.50. Based on the extra $6.50, we sold the initial call for $12, had to buy it back for $18.50. Where's that extra 7 cents? Oh, that's the commission, right? $6.95. So my new effective cost per share on the stock is $331.57, but we've got the 365 call now instead of the 350. At the same time, I want to go back in to the alerts. Let me clear out the drawings. That'll help us. And let's go ahead and put in 370 as my new upper limit. If I want to stay in this and keep it expiring, I'd mark it at red. Again, if I just want to know if it's in the money and I'm expecting max return, I'll just put in the strike price of the call I sold and mark it as green. Let me scroll down now, just click Save Alerts, and the Netflix alert is gone because it's still matching our other technicals, but again, it's not above it. Now I mentioned that we just looked at covered calls mostly, but if I'm tracking, let's say, this long call on Netflix here, which has a reasonable gain on it, what I can also do is go to Position Actions and then Position Analysis. This is for a long call. There's my graph. Here's my original position value, current liquidation value, future expiration value, of course. So we've got about a 59.6% return on this. It was at 97 before the webinar started, so it's been pulling back. But I do see some rollout opportunities. Where I bought this call for $11.50, here are some adjustments I can make that can lower my cost basis into the position so I don't have as much exposure in the market. It's about rolling the call up. An interesting thing here, what if your plan now on this Netflix long call, the 350, 26 October, same as for our other one, what if you maybe wanted to convert it to a diagonal, a quick diagonal, maybe selling this week's expiration on the position to get a little extra premium, maybe go to the 365, 370, but you want to evaluate what that's like. Now, I could just link to the profit and loss chart as we showed before if I already know my roll or my adjustment. In this case, in the portfolio, for a long call, or if it's just a long stock you're tracking, you're not rolling anything. What you'd click on is Add Option Leg and just enter the new leg. But I want to see it first. So when I'm on the rollout opportunity, the position analysis, it gives me some ideas, but it doesn't show me the roll I want. So I'm just going to click on What If Calculations. Takes me right back to that custom spread tool, the profit and loss chart. Stock at 361. Is there any value in that 370 call now that earnings came out today? Oh yeah. In the next couple days, it's still at about 765. Remember, we're only holding a week out. Earnings have happened, it popped up, pulled back. Let's look at that 370 call. And again, I'm just going to tell the system what would happen if I sold this. Oh, this is a spread. I'm sorry. I didn't want that one. My apologies. We could convert it to a bull call spread. But let's go calendar. Let's go this near term. Is there anything in the 370? Okay, that's what I expected. 380, 395. Not bad. Okay, so there we go. That's better. 19th of October, 370. 26th of October, 350. Let's sell this. Let's get about 380, 385. Okay, so now I've got a new calendar where I've reduced my exposure from 1150 to 762. Still make a max profit of about 1634 if the stock is right at our 370 strike price, or if it expires, stays below 370 by Friday expiration, then maybe on Friday or come Monday, I can roll this to the 26th 370 or 375 strike, cancel this a little bit more, maybe have a low risk bull call debit spread. Now again, if this is what I wanted to do, I wouldn't click Add to Portfolio because this would add a whole new diagonal spread on top of the long call. That's not what I want. I just want to convert my long call into this diagonal. So I go back to the portfolio, position actions. Now we add the option leg. What am I going to do? I'm going to sell the 19th of October, 370 call, 370 call. Let's just call it 385, get a little bit of extra price, put in your commission fee as well if you want, and just go ahead and submit it. I don't have a long call anymore. What happened? I do have a calendar spread. This helps with the view. So if you have multiple strategies, you can quickly look at your covered calls, your bull put credit spreads, and your calendars as well. Now another feature that's available is that you probably track multiple positions that have multiple expiration dates, some that will expire this week, some that are expiring next week, some that are expiring next month. So here, I can click on the View the Options Expiring just in the next 9 days, those that expire in October, those that expire in November. So I click Next 9 days, what am I going to see? My calendar, because the first short leg does expire in 2 days and the long is in 9 days. My two bull puts, they expire in 2 days, and this covered call on PHM that's moved against us. take a look at that in a moment too. Why am I not seeing the Apple position? Because that new call we rolled to doesn't expire until November. It's 23 days away. It's not within 9 days. This helps you look more closely at those that are coming up to expiration while filtering out those that are further away. Again, we can always just click on all expirations as well. No, I'm sorry, it's Netflix, not Apple. A question came in. Can it evaluate rollout opportunities if the stock has moved against you? Absolutely. Here's an example I put in for Polte, PHM. A couple of weeks ago, 5 days ago, bought it at 24, sold the 24.50 call for 40 cents. Decent amount of downside protection, but not a lot, and it's moved against us down to 22.92. So in just 5 days, in this position, we've got about a 5%, 4.5% decline. As before, I'm going to take a look at position actions, position analysis, breakdown of my position, my original position value. Current liquidation value, I'm losing 3% after 5 days. If I hold it to expiration, I get that extra 0.1 or 0.2% time decay on this out-of-the-money call. There it is right there. It's only worth 2 cents. Okay? But are there rollout opportunities that can help me convert from a losing trade to a winning trade? Well, down below, we see the first two are actually negative going out 9 days. Here's a positive one, but that's if the stock's above 23. But it's just break even. I think we can do better than that. Well, we go out 16 days, 0.5% return. Still a negative if we go to 22.5 for a little bit extra protection. Might need to go further out. So here's a 1% yield, extending the trade 23 days away from 2 days to expiration, so an extra 21 days for a 1% return. Now, does that match my trading plan of getting maybe 1.5 or 2% every 14 days or so? No. But does it, if I'm still kind of bullish on this position, or I think it'll be around 23, extending it 23 days from today, 21 days from my current expiration, does it take a loss of 3% to a potential gain of 1%? Absolutely. This might be worth it if I think PHM is going to recover, be around 23 or go a little bit higher. Does it look good graphically? Again, here's the one I see the positive return, staying around the current price. I'm still at 0% return at 22.50, so I want to go with this 23. We go to simulate trade, side-by-side comparison. We're not going to make this, and we're in fact at a loss of 3%. We're not near our expected max return of 3.8, and I can only make $23 over the next 21 days, but it's taking a losing trade potentially to a winner if PHM stays right around $23 where it is now at $22.92. So this might be a good potential roll to take a losing trade back to a winning trade, even though I'm extending the time frame by 21 days. All right. And of course, I would use the same thing if I wanted to do this. Just put in the information and submit change to portfolio. That'll roll it for me, so I don't have to do it manually. Now, we rolled 2 positions. We rolled an Apple position that we were looking at in the new portfolio we just created. We rolled a Netflix position that I had in the portfolio that I created for you. We took care of that 26th of October 350 call and rolled it to the 9th of November 365. Where is it? It's not here. Where's my rolled position? The portfolio view under the My Portfolio tab only shows you the active open positions. What I prefer to do is I can take a look at the Analysis tab underneath the My Portfolio, and I can toggle views. Now this is showing me the realized gain or loss. So it's showing me the realized loss that I have of all transactions or rolls in my portfolio on the Netflix position. Well, the realized loss is $6.56. Well, that makes sense. We sold it at 12 on the 10th of October, and we bought it back for $18.50 or so plus the commissions today. So there's my loss. But I keep it at all positions. And what is this showing me here? Anything that's highlighted in red or pink is an open position. What does this allow me to do? Here on Netflix, if I constantly continue, and I'm sorry, apologies, that 25% of you say that you constantly roll your positions, this view allows me to see all of my open positions versus all of my closed positions as well. And then here's my bull put, and here's my other covered call we haven't adjusted. If I go back to our new portfolio, that IRA portfolio that we saw, just toggle here between the views. There's the view on Apple, where we rolled from the 217.5 call. This is a closed position, so it's highlighted in white, has the white background or no highlight. We can look at it that way. And what my new position stands and where my total gain and loss for the portfolio or for the position in my portfolio stands. So we have a 1.5% gain with a new call we sold here on Apple. I've got a 1.2% loss here on this position, which is a lower price stock. That's that Kirkland Lake Gold. And so my total for all transactions in my portfolio is shown right here. Okay, and what is this based on? This is based on the total cash allotment to these two covered calls. So 564.37 is 1% really of the total portfolio value. Okay, so that's where you see your closed transactions, where you see the view if you've been constantly rolling spreads with diagonals or even covered calls on a single stock. Go to the analysis, shows you that view. You can also see your closed positions in the transactions, but this is more of a record-keeping log based on the date open, date closed. Again, you can toggle between the different dates as well. You can add a closed transaction in the portfolio also. If you have a historical trade you made on Apple, we want to add that to it, and then it gives you a running total gain or loss of the total positions. Other views, we quickly have the snapshot view. This just shows you the change basically today, the high or low. This is based on today for every leg in your portfolio. And of course, the allocation. We don't have a lot of allocation in this portfolio, but it breaks down based on asset allocation by sector and asset allocation by industry. And you see the breakdown of the sector and industry here. And you can change it based on investment amount, total number of positions or more, to get you a better snapshot view and a pie graph view of your total portfolio, where your exposure is. I can see mine is in cash. That's good. And highest, of course, is consumer cyclical by sector. So that just gives the snapshot there, gives you that quick view of all your positions based on the change today, the allocation, sort of your diversification naturally as well. We can also take a look at the alert summary. Sometimes, to tell you the truth, I start off in this page. And what I look for here is when I go to alert summary, it gives me the total number of alerts that are triggered across all of my different portfolios. You can create, as you saw, multiple portfolios. If you wanted to track your bull puts separate from your calendar spreads or from your straddles or from your long stock positions, you can create multiple portfolios, and then you can simply toggle between them. So we could go to the radioactive positions, married put positions, for example, and then scroll back over to, hey, what's going on with my IRA portfolio or my different bull put credit spreads. We'll just toggle back there and get the new portfolio view as well. All right, well, ladies and gentlemen, I think I essentially covered everything I wanted to cover for today's presentation regarding the PowerOptions portfolios. I just wanted to mention something very quickly. I'm just going to throw this back up there. 50% of you typically manage positions early on the week of expiration. Okay, so Monday or Tuesday. 25% of you are constantly rolling or adjusting, and 25% of you when a trigger is hit. Why am I bringing that back up? Because those of you, of course, that are looking to manage early on the week of expiration, we talked about the alerts you can set in each position. One of them, of course, is you have the days to earnings, the days until ex-dividend date, and days until expiration. So I'm going to put in that I want to be notified 3 days to expiration for this particular position. For those of you that are constantly rolling and adjusting, well, you're probably rolling and adjusting based on price change of your option, stock change up or down by a certain range. So you'd want to set your upper lower limits, stock increase or decrease. The portfolio will tell you, hey, you might consider trying to roll this position. And of course, when a trigger is hit, whether it's that price change, whether it's based on the stock dropping below its 20-day or 50-day moving average, Bollinger Band, or you've got earnings coming up within 5 or 6 days, the portfolio tool alert section is going to help you with your management, help you with your triggers. And of course, once your trigger is hit, what do? What can I do to this position now that it's going against me? Go to position analysis. Liquidation value, where do you stand right now versus future expiration value as well? And then compare the rollout opportunities to apply your trading plan and say, hey, do these rollouts make sense? And if they don't, maybe I'll go to the profit and loss chart or the what-if calculations from the position analysis view, put in my manual adjustment, and see if the new return makes sense for my trading plan. That's how the portfolio tools are going to help you. Not only with an easy format to track and manage your positions, see the monetary value and the current liquidation and future expiration based on multiple leg strategies here with that position analysis view. Also taking a look at your Greeks view or your important dates coming up, but setting the alerts based on your triggers and your needs to be quickly notified, and of course be notified by email when your alert is triggered, so you know you can evaluate those rollout opportunities or manually evaluate an adjustment using the profit and loss chart what-if calculations as well. So, to review, we talked about creating a new portfolio. Use the setup field. Name your portfolio. Start it off with the cash on hand and starting basis or the total market value of your portfolio. You can enter positions directly from the search by symbol or other tools when you've identified a position, or manually enter a new position from that drop-down menu. I prefer with multi-leg strategies to use that position analysis view in the portfolio. You also have the Greeks view. I think we showed how important it is to set the different alerts based on your trading plan and your goals, and having the portfolio notify you quickly either by email or when you first open it up in the day, you can see those alerts, what's triggered, and know to take action. The analysis tool, the position analysis tool from that more information button is very powerful. We do the heavy lifting for you to evaluate rollout opportunities, adjustments, and more. You can see your new potential return compared to your existing potential return and more, and manually see the rollout opportunities. Then link to that simulate trade to see the graphical interpretation. You don't see a rollout that you were planning, just use the profit and loss chart or the what-if calculations to manually evaluate an adjustment on your position if it matches your goals, and then go back to the portfolio, just use that roll leg feature. And then for all of your closed positions and more, see what your standing is. If you've been rolling a position, a covered call, for example, for 6 or 7 months, click on the Analysis tab under My Portfolios. You see a running tab of your gain or losses on the individual transactions, what's been opened, what's been closed, and more. Okay. Tony asked an important question. We're working on it, but it's not available yet. He says, can you get SMS text alerts? Tony, unfortunately, not right now. The programmers are working on that to be able to have the text alerts sent to you to your phone. But of course, if on your phone you just have your mail open, it's almost done instantaneously when a trigger is hit. It's usually within 1 second when a trigger is hit. So you just see it come in on your mail on your phone, and you know to be able to potentially take a look at those adjustments as well. But right now the SMS text alerts aren't available. That's something that we are working on in the future. All right, well, I just want to remind everyone, go to PowerOp.com. You can take a 14-day free trial if you haven't yet and start using these portfolio tools to help you track and manage your positions. Our subscription levels after the 14-day free trial, and no credit card is required for the 14-day free trial, so we don't start billing you as some other services do at the end of your 14 days. You have to actively tell us you want to be a subscriber because you see the value and the power of our tools. But subscriptions start at just $40 per month. We do have a 20-minute delayed service and a real-time service and historical backtesting tools as well. Some other things coming up this week, tomorrow at 12 noon for the radioactive trading techniques. We're hosting a presentation on the role of the income methods in that structured, protected, married put setup. Typically every Friday at 4:30 p.m. Eastern Time. I sit on the phone with you guys, or many of you I see, for an hour, hour and a half, and I take your questions on the fly about options trading, options strategies. It's our open discussion Q&A every Friday at 4:30. Just so happens that this is, of course, standard October expiration. This webinar was recorded, of course. It'll be available on the webinars page later this afternoon. You can see all of our archived webinars. Just go to powerop.com/webinars.asp. Or, of course, you can register for the upcoming presentations as well. If you think of any questions later on, well, there's going to be a survey at the end of the webinar where you can put some questions in. But if you want to talk with myself or Ernie or one of the other staff members, remember you can email us at any time to support@poweropt.com. You can also call us toll-free at 877-992-7971 inside the continental U.S. And if you're outside the continental U.S., you can reach us at 302-992-7971. Of course, there's contact links on every Power Options page. Ladies and gentlemen, thank you for joining me for today's presentation on our powerful portfolio tools to help you track and manage your positions. Thank you for answering the polls as well, those of you that joined us live and, of course, answered the polls. I hope you have a fantastic remainder of your trading Wednesday and, of course, your trading week. And I hope to see you tomorrow or possibly on Friday for that radioactive trading presentation on the income methods and our open discussion on Friday. Take care, everyone. Good night.